Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Today is June 16th, 2026, and my guests today are from LithiumBank. We have Rob Shewchuk, CEO, Paul Matysek, Executive Chairman, and Kevin Piepgrass, COO. We're going to dive into the trends they're watching in the lithium space, along with the latest developments at Lithium Bank. And Paul, I want to start with you because you don't do a lot of interviews, but you have quite a record in the junior mining and resource development industry, having been directly responsible for 7 or 8 direct takeouts, 2 of which were done with Robert Friedland. These takeouts have provided billions in realized gains to your previous shareholders. Can you touch on that track record and how it fits in to Lithium Bank's endgame?
Sure. Anyways, thanks for hosting us on this show. And you're right. I don't really give many interviews, but I would say that I've done 6 exits, public exits, and a couple of private ones. And it comes with a lot of teamwork. But for me, of those 6, one was potash, 2 were lithium, 2 were gold, and 1 were uranium. So there's kind of a formula because I wasn't really looking at any one type of deposit. I was looking at trends, and I've made fortunes for myself and for people by looking at metal trends and like looking at uranium when it was $10 a pound and thinking that the shot was, being invested in US uraniums. And when uranium went to $100, it wasn't that I picked the best and brightest properties. It was because I had the big trend with it. I naturally also picked good properties, but the trend matters. And same with lithium. I was probably one of the first people involved in looking at lithium, looking at salars, and that was in Argentina. And I thought that was the future VV, and that was 2010. Okay, and it's almost 16 years ago. Potash one, that's where I worked with Robert, and we looked at potash where there was a huge need from the Chinese on growing their fertilizer industry, and right place, the right time. And potash went from, say, $600 a ton, went up to like almost $1,000. Okay, so a lot of successes being, and the same with gold. I sold 2 gold companies, Gold Rock in Argentina. I got in at a price of, I'd say, around 1,200, and had to wait till it went to 2,000 and sold that one because of commodity. But that's one aspect of success. The other one was the resource. Everything in the world, like if you're going to sell a company or develop it, you have to have a resource that is top notch, okay, that either has high grade or has economies of scale. So that's a big thing. All the properties and companies I looked at and sold had that characteristic. And then, it was the intangibles. What do you do? What does one do to unlock that value? Sometimes it's, for instance, potash one. Probably about what, other than the commodity price, was the fact that I managed early on to own control of half of the water resource in a lake beside the deposit. Without that water, there would be no potash one, because there'd be no water to help that production. Okay, and that because of that, I interested likes of Rio Tinto and Zijin, and eventually K plus S bought that company for $450 million because that was one key aspect of it. So people, the resource, and then trying to find what it unlocks the value. And I would say all of those are characteristics. And probably the fourth one that I would use is I tend to look for companies that are capitalized between, you know, 50 and $100 million, because it's a lot easier taking that type of company from 50 to 400 than it is to take a $500 million company and make it 5 billion. So I look for those opportunities in a market cap where one can double and triple and quadruple their valuations. Okay, so to bring that back and with LithiumBank, you know, we're the option here is that when we looked at lithium was in around $5,000 or $6,000 a ton. And 2 years ago, it went up to $80,000 at one time. Okay. So there was definitely a time window that, you know, that LithiumBank wasn't at the right time at the moment, but that was when it would have been a great place to actually sell. And there were a lot of takeouts of lithium companies during that time. The other thing that LithiumBank has has a large resource. It's probably one of the largest in situ resources in North America. And that's king, where, you know, as we know, that there's a fight for lithium throughout the world. And you know, and right now the number of, I think there's 2 mines in all of North America. Okay. So, you know, getting a lithium mine that's also quick to production. So I was looking for something that wouldn't take 10 years to go into production. And so I look for those types of deposits that, you know, DLE, that, you know, that can be extracted from, like, from oil and gas kind of scenarios. So LithiumBank has those characteristics. Okay. And then infrastructure. You don't want to go to a place where you're in the middle of nowhere and you have to get, you know, spend millions and millions of dollars or putting in roads and electricity and moving people. Well, LithiumBank is, you know, is 100 miles, 120 miles from Edmonton, right? And you can drive to it, you can drive through it. It's where the Leduc oil fields are. It's a brownfield area, so it's got compelling infrastructure. So, you know, it has all the right ingredients to build on, and, you know, to show people. And most of all my exits were based around either feasibility or PEA, preliminary economic analysis, where one would show the value of it. And, you know, we would show that it was, you know, unbelievably cheap. And then, you know, and then we managed to attract the interests of, you know, the K+S's for potash, for Grand Colombian, which is now Eris, who bought my Gold X, Lithium One that was bought by Galaxy. So these are, you know, these are fundamental things that how we can build value. And what I hope to do again with the team that we have with Rob and Kevin and John that work at LithiumBank.
That's great. Excellent summary there. I want to move on. We will get into LithiumBank a little bit later in more detail, but for now I want to discuss the lithium price and the current drivers behind that commodity. Now, when people think lithium, of course, they tend to think EVs, lithium-based batteries, as the main driver behind the sector. However, grid storage batteries have become one of the dominant drivers more recently, and we appear to be seeing a resurgence of the sector, with lithium carbonate prices up around 170% year over year. Rob, I'll turn to you on this one. What are the main catalysts and trends you see currently driving the lithium market? And do you think we're in for higher prices up ahead?
Yeah, thanks, Jesse. Definitely. You know, the focus has definitely shifted, you know, from EV penetration rates, you know, to, as you mentioned, battery energy storage systems, with substantial net new solar coming on. Obviously, a lack of domestic lithium supply in North America is often talked about. Current global supply and demand for lithium is about 1.5 million tons of LCE. And the problem is it's projected to double by, I think, 2030. From a North American perspective, the problem gets magnified because North America is 30% of global GDP, right? And it's less than 1% of global lithium supply. So it would take like 50 boardwalks by 2030, to make up for this deficit. Our goal is to position Boardwalk as a producer within the context of that time frame, and higher lithium prices and government incentives, which are out there. But we need them to scale and chip away at that supply deficit. So that's critical.
Kevin, I'll turn to you now because, Paul, you mentioned this about, you put it as people are fighting over lithium around the world. And indeed, we're seeing more resource nationalism, and we've started to see governments prioritize lithium as a strategic asset. Of course, we've got the US administration taking a direct stake in Lithium Americas, launching Project Vault to stockpile critical minerals, including lithium. I wonder how you're seeing government support for projects like yours in Canada. And I want to read a quote here from an article released in the Calgary Herald today. It says, as bureaucrats in Ottawa, Washington, and Mexico City prepare to rehash the Canada-US-Mexico trade agreement, Premier Danielle Smith said critical minerals, particularly lithium, can play a pivotal role in the future of Alberta's trade prosperity. So wrapping it all together, Kevin, I'd love to get your thoughts on how you view increased government support in the sector, the CUSMA, and Smith's comments on lithium potential specifically, and what the potential impact could be on shaping the lithium industry and specifically in Alberta.
Yeah, thanks. It's great to hear Premier Smith, really champion lithium in Alberta. She's been behind it for a little while, but I think with what's happening in the world, you only get more increasing support, especially from someone like Danielle Smith, which we met last year and presented to her, and she really championed the project and continues to mention us in some of her posts. So we are definitely seeing increased government involvement or increased government momentum in lithium projects in Canada. I've been in the lithium biz now for the brine space probably for 10 years now. So I've seen the development of governments dip their toes in the water. What started in Alberta with we had to change regulation and change permitting and all that to really where they are now, saying on an international stage when it comes to trade, something as important as Canada, US, Mexico trade, mentioning lithium as a headline. That's pretty incredible. It shows the level of importance for critical minerals. Because critical minerals have been a buzzword for several years now, but you're really seeing the intensity, right? So in the federal level in Canada, with Mark Carney being now in power, we've had these funds that help projects. They've kind of been restocked with cash. And so we have these new names for these new funds. LithiumBank, we've met with these different departments that have these funds, similar to the US, where you have different departments that can allocate cash to basically the same end game. And we've had very favorable conversations. And when we get to the right point, there are certainly opportunities to help project development funding. When we get through a feasibility study, which we're currently working on. As well as in the US, right, with Project Vault. Initially you had the IRA with Biden, and now you have Trump with the Project Vault. And there's some serious cash in there. I think there's $200 billion to buy and stockpile metals for critical minerals, which goes from copper to lithium and all the rare earths and things. So that is a significant amount of cash. And Canada is part of their strategy, right? Whatever you hear the noise in the news, Canada is eligible for Project Vault funding. And of course the Canadian funding as well. So the government has been increasingly involved in all these projects.
Rob, let's talk about how LithiumBank is playing a role currently in the lithium market. I'd love you to start by providing an overview of the company and your strategy in the lithium market.
Yeah, sure. So Paul had mentioned this earlier. We hold one of the largest portfolios of lithium resources in North America, and the highest grade in the province of Alberta. Our current focus is on developing Boardwalk because it represents a unique combination of scale and grade, exceptional flow rates, and it's 100% owned Crown land. Tenure is important, and it stands alone with no other interest competing in our pore space. Further sets itself apart in many different ways, with an opportunity to repurpose very significant infrastructure, which Paul also touched on. And these are major factors that position Boardwalk so well, and inevitably will hopefully produce a project that is cost effective, timely, and environmentally very sustainable.
Now, you've got your flagship project, Boardwalk. You've got the Park Place project, both of these located in Alberta, and you also have assets in Saskatchewan. Could you walk us through some of the main details for these projects, resources in place, milestones achieved, infrastructure, and timelines moving forward? Kevin, I'll turn to you for this one.
Sure. Yeah. So our focus is obviously in Alberta right now. We have the Boardwalk and Park Place. Boardwalk holds 5.2 million tons measured and indicated, and another 2.8 inferred. So that's about 8 million tons of lithium carbonate equivalent. Our grade's about 80 milligrams per liter, which are 82, sorry, which are the highest in Alberta. Park Place is about 50 kilometers south of that. It's hosted in a very similar formation. It's called the Leduc Formation. They're separate geological formations, but they are the same age and they have very similar brine characteristics. And so we have 15 million tons there, which is very sizable. So together, 23 million tons in Alberta, which is the highest in Alberta, also about 80 milligrams per liter. So both of them count as the highest grade projects in the province. We have two in Saskatchewan. They're Boardwalk, Kindersley, and we call the other one South. These can add value to the company, whether we monetize them or joint venture them. We're looking to work with groups on those projects so that we can focus on the Boardwalk and Park Place. Back to Boardwalk and Park Place. We have done pilot testing on both. We saw very similar characteristics for both brines with our technology partner, that is Schlumberger, known as SLB now. We've completed 2 preliminary economic assessments on Boardwalk. So we have been in the past working very diligently to figure out the best direct lithium extraction technology, the best processing partner. And we've worked we've spent over $40 million on the whole company, but a lot of that has gone to pilot testing and de-risking the technology and de-risking the subsurface and those things. So for the feasibility that we're working on, the whole area will be in a measured category. So we're going to have a very high level of confidence in the subsurface geology. Those milestones are important because they really set up a strong foundation for the next stage of the project development.
Well, let's dive deeper into the initiation of a feasibility study and front-end engineering design for Boardwalk. You announced this on May 28th. What are you hoping to prove out about the resource there, and when can we expect these studies to be completed, Kevin?
Well, the purpose of the feasibility is to include the advantages that we didn't include in the PEA. The PEA was for 34,000 tons of lithium carbonate equivalent. It was done on an inferred resource, and it was done with a completely different technology. And it did not include any advantages that we now have and we now think we can utilize. Those advantages include like location and geology, and I'll get into those in a little bit. But we're also including the improvements and changes to our technology, which is a major change in scope and in strategy of development of the Boardwalk project, which will really make it a competitive project in the brine space in North America, we feel. So for location, Alberta has a lot of advantages over a lot of jurisdictions. We have talented labor force, being in oil and gas, superpower for the last 75 years. Very energy-centric province, so it comes with a lot of advantages there. I think we mentioned access, 4-lane divided highway through the project. Power is a very important thing because having available power with all these AI things, and it's not so easy to just connect to the grid. But our location, we're right beside a major substation in the province, and it's probably the only location that has access power to grid, which simplifies our project substantially. We also have water, rivers and water going through the project, so water is not too much of an issue for us. The government being very favorable, we discussed governments being really involved. We've received money from the government, but it also includes permitting and how they perceive it. So it's through the Alberta energy regulators, which regulate the oil and gas sector. And we're under that umbrella, so we don't need federal approval. We can get things done very quickly. Wells take weeks rather than years for an open pit, so to speak. And everything can be done in under 2 years. So that's a substantial benefit for processing a brine in Alberta. Tenure is also very important when it comes to location because tenure matters. All our claims that we have are all brine-hosted mineral licenses. These are 100% granted from the government, and we own them 100%. We don't have any freehold in the area for surface rights or subsurface rights, sorry, which means when it comes to royalty structure, we just have one government flat royalty, which is typically much lower than a freehold royalty. And we have no carbon sequestration overlapping claims or permits in the area. This is also very important because when you're looking at producing large volumes of brine, you have to manage reservoir pressures, and there's a lot of things to go involved. But we're the only player in that reservoir. It's a depleted oil and gas reservoir, so oil and gas is kind of abandoned in the area, and no one is considering putting CO2 in the same formation because we're just geography helps. We're too far away from any major CO2 emitter, so they're not going to pipe or truck to our reservoir. So it's great in that regard, and really simplifies permitting and the extraction process. The geology hasn't really changed, but I will say, it's a phenomenal resource. The reservoir is 230 meters thick. You got great porosity and permeability, which means we can pump large volumes of brine over a long period of time. Being a single formation, we have consistent grade and consistent impurities. So we're not dealing with grade fluctuations that you see in other areas, which also makes mineral processing simplified, which is important. But really, one of the biggest pieces is the technology. When you think about brine lithium, you're really thinking about, okay, how are they going to extract the minerals? Direct lithium extraction is obviously a hot topic for this. We did spend a lot of time and effort working on this. We have since signed a development agreement with Schlumberger, SLB. And this development agreement takes us all the way to production, right? So they're willing to work with us all the way to production. But part of that agreement includes binding licensing terms for their entire flow sheet. So from pre-treatment at the wellhead all the way to a battery grade product for one flat licensing fee, which is really, really phenomenal. And when you think about who SLB is, they're the largest oil and gas service provider and technology provider in the industry in the world. That's a really big thing to say. They have over 18,000 patents, right? And they continue to advance technologies. They continue to advance subsurface and pumps and processing technologies. So when you look at the whole flow sheet that we have a license for, or terms for, I should say, we have direct lithium extraction. They built the largest of its kind in the world, a lithium processing demonstration plant in their Nevada project. That tested the entire flow sheet. So from wellhead all the way to they made battery grade lithium carbonate. They made about 13 tons, I think. And they stopped that in 2025, but they obviously spent tens of millions of dollars developing that. You can imagine the amount of expertise they have in-house and the expertise they can poach from, the world's best engineers, process engineers, chemical engineers, and the instrumentation and the ability to build things and fabricate things and put things in place. So really couldn't think of a better group to work with to reduce the execution risk and have confidence that they continue to improve their technology. And so the way their technology is based, it's done in modules. So this changes our strategy and our development. So initially we had a really large project, which is a large CapEx, and you have a major implement execution risk and capital risk. How we're going, the modules are increments of 5,000 tons per annum lithium carbonate. So you already reduce your capital risk right there. And the execution risk using SLB is obviously dramatically reduced. And you're not building one thing, you're building a smaller thing that's meaningful. But the feasibility will consider two modules. So we're going to do 10,000 tons to start. Obviously, the reservoir is capable of much larger, but we think that's a very healthy and reasonable and responsible first step to do a feasibility study with 10,000 tons per annum. The technology is also very energy efficient, right? we need to worry about electricity from an OpEx perspective. It's also very efficient in recycling water in the process. So our last test work we did recycled about 93%. I think we can improve on that because water does matter. We do have water, but the less water you use, the easier things are. So from that regard, it's a very, very favorable technology for us, and we look forward to continuing that. We're actually piloting right now. I think it was in the news on the May 28th. We're doing a much longer cycle. This will help optimize the process for commercial development, reduce any kind of reagents, which is not many because it uses water mostly, and optimize electricity and optimize water usage and all that things for commercial fabrication. So we expect to have all that wrapped up, in the first half of 2027, approximately. We have been working on it for several months already, working on the subsurface and all that from the data that we have in the measured resource area. So we have a great deal of information already, and we've been working with that for the well network for some time. So I hope that answers the question.
Yeah, fantastic detailed breakdown. Very much appreciated. Rob, let's end on discussing anything we haven't yet touched on or anything that you think it's important to emphasize the potential shareholders of LithiumBank should be focused on.
Well, I think one of them is that, our cap table, 68 million shares. One of the things we didn't do was sort of, work on the technology DLE side of the coin when so many other companies were doing so. And I think that allowed us to protect our cap table. And so we're in a really good position to make progress here, from a very strong base, almost 40% insider ownership. And so I think that's something that I would speak to. A lot of other companies in our space get, grant money for technology and things like that, and we would look a little bit sort of less attractive from the perspective of receiving those types of funds, but also not taking the dilution associated with spending not just the capital but the time and the energy on the technology side, more working with large companies like SLB and focusing on getting a deal done with them where they put so much time and energy for decades into doing this work.
Excellent. I'm going to put a link in the description below to the LithiumBank website as well as social media for people who want to follow along with the company. Gentlemen, this has been an extremely enlightening conversation. Very much appreciate you all coming on the show and looking forward to watching how LithiumBank progresses from here.
Thanks so much, Jesse.
Yeah, thanks, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.